I think Bitcoin has now become accepted enough that it's part of people's steady buying. I think there's plenty of now traditional finance investors stacking Bitcoin, and they're buying it every month. And I think that's why it's holding steady here. And to me, for Bitcoin really to make its next quantum move, I do think it's dependent on global liquidity. And so the Fed, as you know, is on hold. But if their next move is to hike, then the entire stock market really is going to have to fight through that. It won't necessarily decline, but it has to fight that. And the Fed argument there would be, well, the economy is so healthy, I should be raising rates. But the reality is, at this point in the cycle, the Fed should be easing. It's a question of when. And if they begin easing in the fall, then I think that's going to coincide with Bitcoin making a step function higher. And I still think 200 to 250,000 is possible.
Bitcoin's base is stronger than ever, and one move from the Fed could ignite a rally straight into the $250,000 zone. That's the latest outlook from Fundstrat Capital co-founder and CIO Tom Lee. Bitcoin has reached a level of acceptance where steady buying from traditional finance is now part of the market. Institutional investors are stacking Bitcoin month after month, creating a strong base that holds the price even through market uncertainty. But according to Lee, the next major move will depend on global liquidity. The Federal Reserve is holding rates steady for now, but the cycle points toward eventual easing. When that happens, risk assets will surge, and Bitcoin is positioned to respond first. Lee believes that a rate cut or wave of liquidity will trigger Bitcoin's next explosive move, pushing it toward the $200,000 to $250,000 range. Make sure to stick around until the end of the video, as Tom Lee shares his updated predictions for Bitcoin and Ethereum, including the price targets he's watching for the months ahead.
Rick Edelman joined me on the show. His prediction was 500,000 by 2030. It feels like yours might be a little bit more bullish than that if we look at the next 5 years.
Yeah. I mean, in some ways, I think Rick's probably has a range of numbers. I'm sure 500,000 is just one of the realm of possibilities, because if Bitcoin gets to 500,000 and we're talking 5 years from now, gold's network value probably is close to 27, 28 trillion. So he's just saying Bitcoin will be valued at 1/3 as digital gold, merely as digital gold. And so I think that's conservative. I mean, I think it won't take 5 years for Bitcoin to supplant the network value of gold. So that's why I think when you see something like Cathie Wood at ARK predict over $1 million for Bitcoin, that to me 5 years from now makes more sense. To me, it doesn't seem late cycle. I think it's actually possibly mid-cycle for crypto. But then I've heard some people say that this crypto cycle could be changing because there's now institutional involvement. And as you know, when you look at a traditional cycle for a risk asset in public markets, not in crypto, there's four cohorts that ultimately drive the top in a price cycle. It's retail, it's high net worth, it's institutions, and then it's family offices. And until all four cohorts are really all in on a sector, you never see a peak. And that's excluding the global aspect of crypto. So to me, I think that there's been robust results reported. But I think to me, especially when I look at the sponsorship and ownership of equities like Coinbase or Robinhood, it still doesn't feel late cycle. But to me, Ethereum is being rejuvenated, right? Because we know the community has been galvanized, and we know that there's just an army of interest coming because of the tokenization Wall Street wants to do, and they are choosing to do it on Ethereum. So I think when you think about the future value of activity, it needs to start getting discounted on Ethereum. And I think that's why the price still needs to adjust higher. And I think I mentioned that if we use multiples similar to Circle, you get to 15,000-ish for ETH. And that would just be a today value. So I think ETH is still undervalued. But we also know, just from a trading perspective, look, there's a lot of people who think ETH has become sclerotic, like it's a stale layer one. There's more things happening on Solana or Sui, but the reality is that ETH is a legally recognized blockchain operating within the US, and it's never had any downtime. I thought it was so interesting that Vitalik on the 10th birthday of Ethereum notes zero downtime. That matters to Wall Street. I actually think that's almost a little bit of a hat tip to Wall Street, because banks care about zero downtime. But then, as you know, there's people who have a pair. They like something else and they're short ETH. So I think 4,000 is a line in the sand. But to me, it's just a matter of time.
What happens if we don't get to that $4,000 level?
I don't think it's critical. I think it's like someone who just months ago would have said, well, Bitcoin can't hold 100,000. I mean, how many people said that Bitcoin wasn't going to hold 100,000 because one, there's nothing supporting it, or there's no new buyers behind 100,000. But guess what? Bitcoin's 120,000 now. In fact, I think that there's plenty of new buyers for ETH above 4,000. So to me, I think 4,000. If someone's thinking that that's like a level of resistance that represents something super meaningful, to me, I think it's paper.
Lee points out that Ethereum is quietly becoming the go-to platform for traditional finance. Large investors are starting to tokenize real-world assets like US treasuries and corporate bonds on Ethereum because it's proven to be reliable, legally recognized, and has never gone offline. Other chains like Solana or Sui might be faster, but Wall Street cares about trust and stability, not just speed. Lee believes this shift could push Ethereum to $15,000 as the network evolves into the infrastructure for institutional finance. Combined with Bitcoin maturing into digital collateral, these two assets are moving from speculation to anchors of the global financial system. And that's why Lee sees massive upside still ahead. Now let's watch more clips from Tom Lee as he shares more insights on Bitcoin and the macro economy.
A lot of people tell you the US is in trouble because of the deficit, and the US has unsustainable debt. And that's true because we know the path for the US debt is unsustainable. But here's the thing. When I started on Wall Street in the 90s, that's also what I heard on Wall Street. I remember our economists and our bond heads of fixed income saying the US is on an unsustainable path for debt, and that was 35 years ago. So for the next 35 years, you're going to hear the same thing. The US is on an unsustainable path of debt, yet it's probably not going to make a difference. That's my opinion. But I do agree that we're in a very strange world because the US prints money and they print a lot of dollars, and yet the borrowing cost is really low. It's very mysterious to me, but I don't think today's levels represent any sort of break point. And here's a really simple way to think of it. One, dollars is the reason people have used, own bonds, right, and use the US economy. And dollars are mostly used for speculation. For every dollar of GDP activity that we have, the dollar is traded in oil, bonds, equities 400 times. So as long as the US is the most liquid economy in the world, we're going to print a lot of dollars and interest rates are going to stay low. And the second is that as much as you hear stories that say the US is losing its importance, so the rest of the world is becoming more dominant, and that's why the US is in trouble. One, again, I've heard that story for 35 years. Everyone's told me the US exceptionalism has been over, and it yet has never ended. If you look at the 25 largest companies in the world, 21 of the 25 largest are in America. So just because US borrowing costs might change, is Germany going to suddenly be the place where the next Mag 7 comes? Like, just because borrowing costs change in the US, will Germany suddenly be the next Silicon Valley? I mean, if you believe that, then you should bet against the US. I'm very skeptical of that. So I think you shouldn't make a portfolio decision thinking stocks are going to fall because someone told you the US can't fund its deficit.
You did mention that you were one of the first on Wall Street to make a call on Bitcoin, but do you agree that Bitcoin, Ethereum, these cryptocurrencies will continue to do very well for the next couple of years?
Yeah, I mean, I think Bitcoin is, if you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels. Internet went exponential from 1996. So it's still the earliest days. I think Bitcoin is very useful because in the future, we're not going to be able to trust anything because cybersecurity, there's nothing secure anymore. We can sample your voice. I mean, even someone takes our voice, translates into Korean using my voice, you'll never know what's true anymore. So you need to be able to trust a system. The blockchain, the Bitcoin blockchain is the most trusted blockchain. And that's why the United States wants to have 1 million Bitcoin. US companies are buying Bitcoin. Banks will soon carry Bitcoin as collateral. But Ethereum is really important too. Did any of you buy the Circle IPO or own Circle? Circle is a stablecoin, and they just went public 10 days ago at $31. It's now $242.
What is the ticker code?
CRCL.
CLCL.
Circle is a stablecoin. It's the second largest. Stablecoins are being pushed by the United States government. Here's the thing. Circle runs on Ethereum. Stablecoins run on Ethereum. So as stablecoins explode, Ethereum is the backbone for stablecoins. So I think Ethereum is going to make a big comeback as well. So I think those two are useful. And then Solana I like, but it's not nearly as used as Ethereum.
Bitcoin is still early in its adoption curve, comparable to where the internet was in 1996. Back then, the technology was functional, but only a fraction of the world was online, and its explosive growth was still ahead. Today, over 95% of investors have no Bitcoin exposure, leaving massive room for new adoption waves to push prices higher. However, that might change quickly, as adoption is now expanding beyond retail investors. Companies are adding Bitcoin to their balance sheets, banks are preparing to use it as collateral, and stablecoin infrastructure is tying Bitcoin into the broader financial system. This is the same kind of exponential S-curve that has driven every transformative technology, and it leaves no doubt that Bitcoin's long-term upside is far from over. Will you be part of the small percentage of investors who own Bitcoin before the next major adoption wave hits? If you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.